Sandeep, the first question is that this quarter you've delivered a 2.9% revenue growth, quarter on quarter. But I remember in our past interaction, you said that the endeavor of the company is to see a quarterly revenue growth of 3 to 5%. Do you think that's possible going ahead? 3 to 5% quarter on quarter revenue growth for Persistent?
So from our perspective, if you look at the quarter gone by, we delivered roughly 3% in US dollar terms and similarly in rupee terms. From a year-on-year perspective, this is pretty healthy growth, coming in at about 17.1% in dollar terms, 23.6% in rupee terms. Now, we have maintained that we will grow anywhere between 2 to 4, 3 to 5%, depending on the macro environment. And we have come in pretty close to 3%, rather 3% growth quarter on quarter. Our endeavor is to maintain this, and we are expecting the macro to turn towards the better over the next 2 to 3 quarters. And then, we hope to have the acceleration come back again.
Okay, got that. So you're maintaining the 3 to 5% quarterly revenue, rate that you are expecting. But what about the EBIT margin? Because we have seen a decline of around 50 bips in Q1, and this is when there's been no wage hike. The wage hike is going to come next quarter, right? So can you explain why we've seen this kind of contraction?
So if you look at our financials seasonally, if you compare the same quarter for the last several years, there's a visa cost that comes in this quarter, which is a seasonality that happens. So that contributed to about 40 basis points impact on the profitability. There were a few small points like amortization going up by 20 basis points, 10 basis points of doubtful debt provision that we factor in conservatively in the given macro. And factoring for all of that, we were at 15.4%. That's the margin walk. Now, obviously, we have said repeatedly over the last several quarters, our ambition in the medium term is to take it up by 200 to 300 basis points, and we stand by that.
Right. Now, in the second quarter, you effect wage increases, right? So will that quarter margins come under pressure? I mean, what should we expect if you can guide us? The wage impact on margins?
So first of all, we are very happy to report that we have implemented the salary increments for our global employees as per the regular salary cycle, which is effective July 1st. So we have not deferred any compensation, whether it is a management team or our employees at large. So we have gone in, we have done about 7.5% average in India and about 3.5 to 4% globally, depending on different geographies. That's the average wage hike. Obviously, some will get more, some will get less. Now, that will have an impact in this quarter. But we are, hoping with the revenue increases, with other cost control measures and everything, we are hoping to have an impact between 1.25% to 1.5%. And that also will try and neutralize as we go along.
Sandeep, there is a perceptible drop in your deal wins this quarter. Whether you look at it in terms of the total deal wins, new deal wins, the annual contract values, all of them have seen a decline QoQ. Can you explain that?
So if you look at our year-on-year deal win, it was a tad bit higher compared to the same quarter last year. Obviously, in this given macro, and please remember, as compared to a number of our peers in the industry, 78-79% of our revenues come from the US. So there were certain deals that spilled over to the next quarter, which are not deals lost or gone, which are deals that just have taken a little bit more time to close, given the macro and given the long weekend starting the July 1st, the July 4th long weekend. So we are not worried about that. We remain cautiously optimistic about the revenue growth. And I don't think one should worry about the small tad bit movement of the bookings here or there.
Okay, not really worried about the deals. Sandeep, just a slightly broader question now. How would you characterize the environment that we are seeing today versus, say, 3 months ago? I mean, have we seen a big deterioration come through? Because just yesterday we heard from Infosys, which is, of course, one of the largest players, and they've significantly slashed their growth forecast. So what is the overall environment looking like right now?
If we were to look at sequentially the macro for the last few quarters, it has been deteriorating. Now, if you look at what we have been hearing from our customers and prospects over the last several quarters, they have been, looking at the environment the same way as you and I are looking at today. And the hope is that over the next 1 to 2 quarters, that is the time where people are expecting this to stabilize and then start coming back. So that is where we are seeing the demand environment is good. The decisions are getting delayed. There are a little bit of tepid ramp downs and so on in some cases, and there is a little bit of delay in some deals. But overall, if I was to look at the bigger picture still remains robust. If you look at it, 3% quarter on quarter in an environment like this that we have been able to deliver is a proof point of at a company level, the strategy is working out. Obviously, the market out there is tough, and every company will have to figure out their own strategies.
So you said you're seeing some tepid ramp down in deals. Which verticals for you are tepidly under pressure, if I can put it that way?
So not necessarily, I wouldn't say that any particular vertical is under pressure. I would say BFSI is, where I would say there's a little bit more softness. For us, traditionally, the technology segment has been much more, healthier. From a healthcare life sciences perspective, while this quarter saw a tad bit of decline, that was subject to basically one particular customer which had seen significant growth in the COVID times, and a number of customers who are in the value chain of the COVID test kits versus COVID-related products. They saw revenue go up. Now they are rationalizing their spend. That's where we were impacted a little bit. But overall, we remain bullish on healthcare life sciences. We remain bullish on the technology segment. BFSI will be a little bit smooth, although it has done well for us so far. So that's our outlook for overall the vertical side of it.
Okay, so BFSI is still a bit subdued. You have plans to double your overall revenues. Last year, you achieved $1 billion. Your aspiration is to hit $2 billion in the next 3 to 4 years. Do you think the timeline may need to get extended given the current macro uncertainty?
So look, these are cycles that will come, that will go. There was a COVID cycle. And despite the COVID cycle, we were able to double our revenues from, literally 481 million to 1036, and that was done over 4 years. And more specifically, in 3 years, we moved from roughly 501 to $1 billion plus. Now, if you look at this, these are cycles that will come and go, and we have to have the maturity of dealing with these cycles. We stick by our aspiration of $2 billion over the next 4 years, and we'll execute to it. Balance, we'll let the time pan out.
All right, got that. Just one final question before we let you go. We have been talking so much about AI. So any generative AI related revenue that you've seen in the current quarter itself?
So generative AI, we have made significant progress, whether it is, the tie-ups that we have with the hyperscalers like Amazon Web Services. We have a good tie-up with Microsoft and Google as well. We have been working on a number of proof of concepts with our customers. There are more than 50 distinct discussions that are going on as of this point in time. The early wins are smaller proof of concepts. There is a smaller set of revenue. Not that it is making a significant dent in our growth as of this point in time, but over the next 2, 3, 4 quarters, we should start seeing this become an impact. And please keep in mind, generative AI is a next generation of artificial intelligence. We at Persistent have been working on AI related stuff for many, many years. For us, it's a natural evolution compared to a number of our peers for whom this is new. So we are pretty reasonably entrenched. And even if you look at our press releases with AWS or with Microsoft and so on, we've been making significant progress on that. So not big revenue as of now, but over the next several quarters and years, this will become a good source of revenue.
All right, we leave it at there. Sandeep, thanks a lot for joining us and taking us through your outlook. That is the management of Persistent Systems telling us that they continue to hold on to their guidance of 3 to 5% growth every quarter. On margins, they are expecting around 200 to 300 basis points over the medium term. And on deals, they're saying that they have not seen any cancellations, but maybe some deferrals to the coming few quarters. By the way, Ashok Leyland's numbers are flashing on your screen. Net profit has come in at 575.